Amounts not deductible under section 40A, subsection IA. Now, having understood the previous one where we dealt with the case of a non-resident, this becomes fairly easy. The difference is, in this case, the payment are made to a resident, right? So let us see, what is the nature of expenditure? The nature of expenditure is, let's say there are two people, the payer or P and the recipient. So the payer is making a payment to the resident for the following amount: interest, commission or brokerage, rent, royalty, fee for professional services or fee for technical services, payment to a contractor or a subcontractor being the resident. So what is necessary is that this person who's called P in this diagram is making a payment to R, okay? The payment which is being made should fall under either of these options. So it could be interest, commission, brokerage, rent, royalty, fee for professional services or fee for technical services, payment to a contractor or a subcontractor, right? Being a resident. So this person who is receiving the payment is supposed to be a resident. So let's say these conditions are satisfied. You're making a payment which falls within these. Let's say we'll take commission as an example. So P is making commission payment to R, right? R is a resident. But what happens is when P makes a payment to R, he does not withhold tax. Tax has not been deducted. What's the default? The default is tax has not been deducted, or after deduction has not been paid on or before the due date specified under subsection 1 of section 139. So in the previous section which we noted about the non-resident, the payment was to be made within the time specified under section 200 subsection 1. Here it is 139 subsection 1, which is nothing but your due date of filing of return, right? So what we see here is that what is the due date of filing of return of P, right? If P does not deduct tax, then this amount is not allowed as a deduction, or P deducts tax but he does not deposit it with the government before the due date of filing of return of income. Whose return of income? P's return of income. The consequences are such amount will not be allowed as a deduction in the relevant previous year. So if you are deducting tax in financial year 2011-12, this amount is not going to be allowed as a deduction to you. Subsequent payments, deductions allowed. If tax is deducted in any subsequent year, okay, or after deduction in concerned previous year but are paid after the due date. So let's say you deduct tax during financial year 12-13, right? Or maybe you deducted the tax during financial year 11-12 but you deposited it after the due date of filing of return of income. Then this amount is allowed as a deduction in computing the income of the previous year in which such tax has been paid. So whenever you finally pay the tax in that year, you are going to get a deduction for this expenditure, right? Just to get back to the drawing board, specified payments, right? Payable to a resident, tax not deducted, tax deducted, not paid, okay, before 139(1) date, no deduction. If paid in subsequent year, deduction allowed in that year when the tax has been paid, right? Let's move on to the next slide now.